You're already set up to fail before you place your first trade, before you risk your first dollar, before you even open a chart. The failure is already baked in. Here's the truth that nobody wants to hear. Most traders don't fail because of bad strategies or poor execution. They fail because of the mindset they bring to trading on day one, and by the time they realize it, their account is already gone. Let me be direct. The way you're thinking about trading right now is wrong. The expectations you have are wrong. The approach you're planning is wrong. And unless you fix these foundational problems before you start, you're just another statistic waiting to happen. The lottery ticket mentality. Here's how most people discover trading. They see a social media post, a guy on a yacht. I made $10,000 today from my laptop. They see the YouTube thumbnails, stacks of cash, luxury cars, from $500 to $50,000 in 6 months. Their brain lights up. This is it. This is the ticket. They imagine quitting their job, financial freedom, working from anywhere, living the dream. And right there, in that moment of excitement, they've already failed. Because they're not seeing trading as a skill to master, they're seeing it as a lottery ticket to cash in. This mindset is poison. When you believe trading is a get-rich-quick opportunity, you approach it completely wrong. You don't study seriously, you don't practice patiently, you don't build gradually. You jump in with real money immediately because you can't wait. You risk too much because you're chasing those big wins you saw online. You have no patience for the learning curve because you expect instant results. The market destroys this mindset in weeks, sometimes days. You lose money quickly. You're confused and frustrated. You thought this was supposed to be easy, and you quit, blaming the market, the strategy, the broker, anyone but yourself. The problem wasn't trading, the problem was your mindset before you even started. The unrealistic timeline. Here's another way traders fail before starting. Unrealistic expectations about time. They think they'll be profitable in a month, maybe 2. They've watched some YouTube videos, read a book, taken a course. How hard can it be? This is delusional. Trading is a skill like any other. Actually, it's harder than most skills because it requires technical knowledge and psychological mastery. Think about any other skilled profession. A surgeon trains for over a decade. A pilot needs hundreds of training hours. A lawyer studies for years. But somehow people think they'll master trading in a few weeks? The math doesn't work. Most consistently profitable traders will tell you it took them 2 to 4 years to become reliable. Some say 5 or more. But new traders don't want to hear this. They want shortcuts. They want the secret strategy that works immediately. So they jump in underprepared. They start trading real money after a week of study. And they lose because they're competing against people who've spent years mastering this craft. You wouldn't step into a boxing ring after watching a few fights on TV, but that's exactly what new traders do. They step into the market unprepared against professionals who've been doing this for decades. The outcome is predictable. The capital problem. Here's the third way traders fail before starting. They begin with too little capital or too much capital. Both are deadly. Too little capital creates impossible pressure. You start with $500 thinking you'll grow it quickly, but you can't risk properly. You can't take enough trades to see your edge play out. Every loss feels catastrophic because it's a huge percentage of your tiny account. So you overtrade trying to grow it faster. You risk too much trying to make meaningful profits. You take excessive risk because you think, what's the difference between $500 and zero? This desperation guarantees failure. Too much capital is just as bad. You deposit $50,000 because you're serious about this, but you haven't proven you can trade profitably with $1,000 yet. Now every trade is moving serious money. The psychological pressure is intense. You freeze up. You second-guess everything. You can't pull the trigger because the stakes feel too high. Or worse, you're careless because you have so much cushion. You take stupid trades because a $500 loss feels like nothing on a $50,000 account, until you've lost $20,000 and suddenly realize this is real money. The right approach? Start with an amount you can afford to lose completely. Money that won't change your life if it disappears. Then, prove you can be profitable with that before adding more. But most traders skip this step. They either start too small out of fear or too large out of arrogance. Both paths lead to failure. The knowledge gap. Most traders fail because they don't know what they don't know. They think trading is about predicting where price will go. So they learn a few patterns, maybe RSI, maybe support and resistance. They watch some videos, and they think they're ready. But trading isn't about prediction. It's about probability, risk management, position sizing, psychology, and execution. It's about understanding market structure, volatility, correlation, and time decay if you trade options. It's about knowing when not to trade, how to scale positions, when to take profits, how to manage losing streaks. New traders don't even know these topics exist. They think they need to learn which way the market goes and that's it. So they start trading with massive knowledge gaps. They don't understand position sizing, so they risk random amounts. They don't understand probability, so they quit after 3 losses thinking their system doesn't work. They don't understand psychology, so they break every rule when emotions spike. These gaps kill them, not because they're stupid, but because they didn't know what to learn before starting. The lack of testing. Here's where most traders guarantee their failure. They find a strategy and immediately trade it with real money. No back testing, no forward testing on demo, no proof it actually works. They just assume it works because someone on YouTube said so, or because it makes logical sense, or because they want it to work. This is insanity. You wouldn't buy a car without test driving it, but traders will risk their capital on an untested strategy without a second thought. Then they're shocked when it doesn't work. But the strategy was supposed to have a 70% win rate. Maybe it does, maybe it doesn't. You never tested it. You just believed what you were told, and now you're broke. The professional approach is to test everything before risking real money. Backtest the strategy on historical data. Does it actually produce the results claimed? Forward test on a demo account for at least 100 trades. Does it work in real, current market conditions? Can you execute it emotionally? Journal every demo trade. Do you follow the rules? What are your psychological challenges? Only after this process do you risk real money. And even then, you start with the minimum position sizes. But most traders skip all of this. They go from learning a strategy to trading it with real money in the same day. The failure is built in from the start. The wrong motivations. Let's talk about why you want to trade. If your answer is to make money, you're already in trouble. Everyone wants to make money, but why trading specifically? If it's because you hate your job and need an escape, that's dangerous. You're running from something, not towards something. You'll be desperate. Desperation kills accounts. If it's because you want to prove you're smart, that's ego. Ego has no place in trading. The market will humble you repeatedly. If it's because it looks easy and fun, you're delusional. Trading is neither easy nor consistently fun. If it's because you need money fast, you're doomed. Need is the enemy of good trading. The right motivation? Genuine interest in markets, desire to master a challenging skill, comfort with uncertainty and risk, understanding that this is a long-term commitment. But most people come to trading with the wrong motivations. They need it to work. They need it to work fast. They need it to save them. And need creates desperation. Desperation creates bad decisions. Bad decisions create losses. The losses prove they were right to be desperate. And the cycle continues until they quit. How to actually start correctly. So if most traders are set up to fail before they start, how do you start correctly? First, fix your expectations. Accept that this will take years, not months. Accept that you'll lose money during the learning phase. Accept that there's no shortcut. Once your expectations are realistic, you won't quit prematurely. Second, start with education, real education. Learn about risk management before learning strategies. Learn about psychology before learning patterns. Understand the foundations before building the house. Third, test everything. Backtest, forward test on demo for months. Prove the strategy works before risking a penny. Fourth, start small, absurdly small. Risk amounts that feel meaningless. The goal isn't profit yet. The goal is developing discipline and proving that you can follow rules. Fifth, focus on process, not results. Did you follow your system? Did you maintain discipline? Did you learn something? These are your metrics early on, not profit and loss. Sixth, be patient with yourself. You'll make mistakes. You'll break rules. You'll lose money. This is part of learning. The question isn't whether you'll fail, it's whether you'll learn from failure or repeat it. The brutal truth: most traders fail before their first trade because they bring the wrong mindset, wrong expectations, wrong preparation, and wrong motivations. The market doesn't create these problems. You bring them with you. And until you fix them, no strategy will save you. So before you place your first trade, ask yourself, have I accepted this will take years to master? Have I tested my approach thoroughly? Am I starting with appropriate capital? Do I understand risk management, psychology, and probability? Am I prepared to focus on process over results? If you can't answer yes to all of these, you're not ready. And starting anyway means you're choosing to fail. The good news? You can fix all of this before you start. You can build the right foundation. You can set yourself up for success instead of failure. But it requires honesty about where you are and patience to do it right. Most traders won't do this work. They'll skip straight to trading and become another statistic. Don't be most traders.